AI stocks on fire. Are you riding the wave? Hold on to your hats, folks. The stock market is buzzing, and it's all thanks to the incredible rise of artificial intelligence. The excitement is palpable, and the opportunities seem endless. Investors are flocking to AI stocks, hoping to catch the next big wave. But what does this mean for you? Are you ready to dive in, or are you still on the sidelines, watching the action unfold? AI stocks are soaring to new heights, leaving many investors wondering, is it time to cash in or hold on tight for the ride of a lifetime? The potential for growth seems limitless, but with great potential comes great risk. It's a thrilling time to be an investor, but it's also a time for caution and careful consideration. The stakes are high, and the rewards could be even higher. We've seen this movie before. Remember the dot-com boom? It was a time of unprecedented growth and excitement, much like what we're seeing now with AI. Investors were eager to get in on the ground floor of the next big thing, and the market was flooded with new opportunities. But as we all know, not every story has a happy ending. Investors were throwing money at anything with a dot-com at the end. It was a frenzy, and everyone wanted a piece of the action. The promise of quick riches was too tempting to resist, and caution was thrown to the wind. But as history has shown us, what goes up must come down. But then, the bubble burst. The dot-com crash was a harsh reminder that not all that glitters is gold. Many investors lost their fortunes, and the market was left in shambles. It was a sobering lesson in the dangers of unchecked speculation and the importance of due diligence. Is the same thing about to happen with AI? The parallels are hard to ignore, and the fear of another bubble is very real. But there are key differences this time around. AI technology is more advanced, and its applications are far-reaching and transformative. The question is, can the market sustain this level of growth, or are we headed for another crash? This isn't the Wild West of the internet anymore. The market is more mature, and investors are more savvy. There's a greater understanding of the technology and its potential, and the opportunities are more grounded in reality. But that doesn't mean the risks have disappeared. It's still a volatile market, and caution is still the name of the game. AI is the real deal. It's changing the world before our very eyes. From smart devices to advanced robotics, AI is revolutionizing industries and creating new possibilities. The technology is here to stay, and its impact will only continue to grow. But with great power comes great responsibility, and it's up to investors to navigate this new landscape wisely. From self-driving cars to life-saving medical technology, AI is the future. The advancements we're seeing are nothing short of miraculous, and the potential for further innovation is limitless. But as with any new technology, there are challenges and uncertainties. The key is to stay informed and make smart, strategic decisions. But even with all this potential, you gotta be smart. The market is unpredictable, and it's easy to get caught up in the hype. It's important to do your research, understand the risks, and make informed decisions. Don't let the excitement cloud your judgment. Stay grounded and stay focused. Don't let greed cloud your judgment. Are AI stocks overvalued? It's a question that every investor needs to consider. The market is hot, but that doesn't mean it's invincible. There are signs of overvaluation, and it's important to be aware of them. Look at the fundamentals, analyze the data, and make decisions based on facts, not emotions. Let's dive in and find out. The world of AI stocks is exciting and full of potential, but it's also complex and ever-changing. By staying informed and making smart, strategic decisions, you can navigate this new landscape and ride the wave to success. So are you ready to take the plunge? The future is here, and the opportunities are endless. Let's explore them together. The big players, Nvidia, Alphabet, and Microsoft, leading the charge. Let's talk about the titans of the AI industry, Nvidia, Alphabet, and Microsoft. These companies are not just leading the charge, they are defining the future of technology as we know it. These companies are at the forefront of AI development, and their stock prices reflect their dominance. Investors are closely watching their every move, and for good reason. The advancements in AI technology are not just incremental, they are transformative. Nvidia, the graphics chip powerhouse, has seen its stock price more than triple this year. This surge is not just a fluke, it's a testament to their cutting-edge technology and strategic vision. Why? Because their chips are the brains behind AI applications. From data centers to autonomous vehicles, Nvidia's technology is the backbone of modern AI. Then there's Alphabet, Google's parent company. Alphabet is not just a search engine giant, it's a conglomerate of innovation. They're using AI to revolutionize everything from search to self-driving cars. Their AI algorithms are setting new standards in efficiency and accuracy, making everyday tasks smarter and more intuitive. Their stock is up over 50% this year. This growth is fueled by their relentless pursuit of innovation and their ability to monetize their AI advancements effectively. And don't forget about Microsoft. This tech giant is not resting on its laurels. They're integrating AI into their cloud computing platform, Azure, and their stock is soaring. Azure's AI capabilities are attracting a wide range of industries, from healthcare to finance, making it a versatile and powerful tool. These companies are making big bets on AI, and investors are reaping the rewards. The financial markets are responding positively, and the future looks promising. But is the momentum sustainable? While the current trends are encouraging, the market is inherently volatile. Let's examine the arguments for selling. Some analysts believe that the current valuations are too high and that a market correction is inevitable. They argue that while AI has immense potential, the hype may have driven prices beyond reasonable levels. History has shown us that markets can be unpredictable. The dot-com bubble of the early 2000s is a stark reminder of how quickly things can change. Investors need to be cautious and consider the long-term prospects of these companies. On the other hand, the potential for AI to revolutionize industries is enormous. From healthcare to transportation, AI is poised to make significant impacts. The key is to balance optimism with realism and make informed investment decisions. Diversification and a long-term perspective are crucial. While it's tempting to ride the wave of AI stocks, it's important to have a balanced portfolio that can weather market fluctuations. In conclusion, Nvidia, Alphabet, and Microsoft are leading the charge in AI, and their innovations are shaping the future. Investors have much to gain, but they must also tread carefully. The journey of AI is just beginning, and the road ahead is filled with both opportunities and challenges. Cash out now. The case for selling high. In today's fast-paced financial world, making the right decision at the right time can be the difference between significant gains and substantial losses. Okay, let's talk about the elephant in the room, overvaluation. Overvaluation occurs when the price of a stock is much higher than its intrinsic value. This can be due to market hype, speculation, or unrealistic future growth expectations. Some experts believe that AI stocks are in a bubble. A bubble forms when asset prices inflate rapidly to levels far beyond their intrinsic value, often driven by exuberant market behavior. They argue that the recent price surge isn't justified by the company's current earnings or future prospects. This means that the current high prices of AI stocks may not be sustainable in the long run. Remember what happened to the dot-com darlings? During the late 1990s, many internet-based companies saw their stock prices skyrocket, only to crash dramatically when the bubble burst. Many of them crashed and burned. Investors who didn't sell in time faced massive losses, and some companies never recovered. Could the same fate await today's AI high flyers? It's a question worth considering, especially if the current valuations are not backed by solid fundamentals. Another reason to consider selling is market volatility. Volatility refers to the frequency and magnitude of price movements in the stock market. The stock market is like a roller coaster. It has its ups and downs, and sometimes the ride can be quite wild. What goes up must come down. Market corrections are a natural part of the financial ecosystem, and they can be triggered by various factors such as economic data, geopolitical events, or changes in investor sentiment. And when the market corrects, AI stocks could take a nosedive. If the market perceives that AI stocks are overvalued, they could be among the first to fall. Finally, investor sentiment can change on a dime. Sentiment is the overall attitude of investors toward a particular security or financial market. Right now, everyone is excited about AI. The technology promises to revolutionize industries, and this excitement is reflected in the soaring stock prices. But what happens when the hype fades? If the anticipated breakthroughs don't materialize as quickly as expected, or if new competitors emerge, the enthusiasm could wane, leading to a sharp decline in stock prices. So, is it time to cash out? Only you can decide, but it's crucial to weigh these factors carefully. The long game. Why holding might be the golden ticket. Now let's flip the script and look at the reasons to hold on to your AI stocks. The biggest reason? Long-term growth potential. AI is not a fad. It's a transformative technology that's going to revolutionize every industry on the planet. The companies that control AI will control the future. And let's not forget about the incredible pace of technological advancement. Every day, there are breakthroughs in AI. These breakthroughs are creating new opportunities and driving further growth. Strategic partnerships are also fueling the AI boom. The big players are teaming up with smaller companies to expand their reach and accelerate innovation, beyond the hype factors to fuel your decision. So what's the verdict? Sell or hold? The truth is, there's no easy answer. It depends on your individual circumstances, risk tolerance, and financial goals. Before you make any decisions, consider the bigger picture. What's the economic outlook? Are interest rates rising? Is inflation a concern? Also, think about your portfolio diversification. Do you have all your eggs in one basket? It's always wise to spread your investments across different asset classes to mitigate risk.